guys, this is Jessica Laine and welcome to the technical analysis portion of this course. First and foremost, technical analysis is literally my baby. Like, it's legit the nitty gritty of trading. When a lot of people look at me and they see my charts, they're like, what is going on with your charts? I'm gonna be breaking down a lot of that so you guys can really understand in totality. Now, before we go over how to break down technical analysis, we must first understand what technical analysis is, okay? Technical analysis is an approach that is used to bring a sense of order to what a lot of people look at as random price movements. So, traders use technical analysis to identify trade opportunities as well as their entries and their exits, okay? So in a nutshell, technical analysis looks at historical price movements to predict future price movements that's going to occur in the market. The reason that these price movements are able to be identified from past price is because the market is made up of humans. So the emotional forces that dictate buying and selling decisions are reflected in the historical price patterns that appear over a duration of time from past traders. If you look at past behaviors, it will give you a guide as to what is likely to happen in the future. Now, I do want to say that technical analysis requires a great deal of patience and practice, but if you guys really apply what I'm going to be showing you guys will be able to make money. However, I'm going to be going over a lot of the basics while I'm going over this because, again, technical analysis is so in-depth that you really have to be able to understand everything from different approaches. Now, you have three different types of traders in trading. You have scalpers, you have intraday traders, and then you have swing traders, okay? So short-term traders are scalpers, which focus on the next few minutes and hours to be able to capitalize off of the market, whereas intraday traders focus in on the overall day, and then swing traders look at the overall price data so that they can hold longer positions. We're gonna get more in detail with this when we talk about time frame correlation when we get to our charts, but for now, let's first understand the three types of technical analysis, okay? So technical analysis can be broken down into three main approaches. First is chart analysis, okay, where you're identifying price trends. The second is pattern recognition, where you are really able to identify a reversal or a breakout. And the third is the momentum and trend analysis, where you're able to really gain a sentiment regarding price movement based off of volume, okay? So there are a couple things that I'm gonna break down and I'm gonna write them down here on the whiteboard. The first is support and resistance. Next, we have trends. Next, we have trend lines. Then we have pullbacks. We have candlesticks. Price action. Supply and demand. And last but not least, all of this falls under our market structure. Now, when looking at support and resistance, first we have to understand support. Support is literally a level in which price does not fall below for a certain period of time. So the support level is created by buyers literally entering the market, okay? When this happens, buying interest literally overwhelms selling interest where price literally stops. So support is the floor in which price cannot go below. Next, we have resistance. Resistance is the ceiling. So of course it's the opposite of support, but it's literally where selling interest materializes and buyers run out. So we can no longer go up. So when this happens, think of price going up in a rally, and then you have a ceiling in which price cannot go above, okay? Now again, support is the floor, resistance is the ceiling. Now when it comes to support and resistance levels are based off of prior price action, really known as highs and lows, or the consolidation. Now consolidation is when the market moves in a sideways trend, okay? Now you have uptrends, which I've drawn here, and then you have downtrends, which I've drawn here. So again, we have our ceiling, and then here we have our floor. Now, support and resistance can also be drawn by our trend lines, but first we must understand our trends. Now, our trends are dealing with market structure where our price is moving up, again, down, or sideways. Again, we talked about sideways movement as consolidation, but then when we have trends going up. I'm gonna put a trend line literally under this trend. And to draw trend lines, really what you're doing is connecting our points, okay? Now, anytime price move higher on an uptrend, there's a peak that is involved, okay? And it moves higher than the peak before. So you're composed of higher highs and higher lows. Every single point in which the market moves up, it is a high. And this part right here is what we call pullback. So the market literally pulls back and makes a higher low point. Now, the same is opposite for a downtrend. I'm actually going to erase this when it comes to, I wish I had my, actually. Because I want to really kind of show you guys this on another level in terms of my uptrends and downtrends. So I already explained the consolidation, but now we're gonna kind of look at it as one big sequence in regards to structure. So let's say we have our uptrend. Again, our uptrend is made of a series of highs and lows. Then before we change direction, we have the market play out as consolidation. So we have literally here before we go into our downtrend. So look at this structure. Again, we have our highs. So here we have a higher high. Here we have a higher low because this low is lower than this low. Now we have a new high, which is a higher high. And then the market again pulls back. Every time the market pulls to a further area, it's pulling back so it can go further up. So you want to kind of look at this as like a runner or somebody running full speed. If somebody runs full speed, I'm running, I have to really take a break before I can sprint and run again. Then I have to take a break, which makes our higher low point, and then I can run higher again. Now, at the point in which we have consolidation, again, we have our support and resistance, resistance being the ceiling, support being the floor, then we break down. Now, when we break down, we now have composed a low point. Then we have a lower high because, again, this is lower than the previous high. Then we have a lower low, and then again, another lower high point. Okay, so I hope that makes sense. Now, in regards to our trend lines, okay, so again, every point that pulls back is pulling back so it can push again. When you have your trend lines are really identifying the structure of our trend. So I will literally draw a line at the bottom of this for an uptrend and at the top of this for a downtrend, okay? And what you're doing is connecting literally those pullback areas. So when the market shifts, it pulls back so it can go lower, okay? Now, when we talk about price action is really the structure of the market. I'm actually gonna talk about price action a little bit when I go into candlesticks, but when you look at the price action is literally the movement of the market and what price is actually doing. But something that I wanna go over before I erase this off the board is really our supply and demand zones. So supply, when you think of something having literally a limited supply, right? There will be a higher price that is involved, okay? So our supply zones are always at the top. Our demand zones are always at the bottom, okay? Now, if there is a low demand for something, then the price will be low, right? Because you want to encourage the customer to buy it. So it's nothing more than equivalent to real life economics. You're buying low, you're selling high. So our supply zones are at the top and our demand zones are at the bottom, okay? However, they're a little bit different from support and resistance lines because when I think of support and resistance lines, I'm literally drawing a line. With supply and demand zones, and I'm gonna talk about this once we get to our actual charts, I use supply and demand zones as a zone, as an area. It might not be one price, but it's gonna be a range of price in this vicinity because again, when we talk about our candlestick structure as well as our price action, we're gonna go over how you have wicks that can literally push up, but price not actually break through a certain area, or it can test the area and then come back down and close in a zone, okay? So if that did not make sense, again, I'm gonna actually go over this when I'm going over the full chart, but I want you guys to kind of get a visual before I break down the actual charts on TradingView, okay? Now the next thing I'm gonna be going over right here are our candlesticks and our price action. So when you're looking at your candlestick structure, okay? All right, so when you're looking at your candlestick structure, the candle is made up of a body. This is the body of a candle. Now in this candle, let's say this is our open. This is where the candle opens. And then let's say the market's moving. Now you have different times of candles and I'm gonna talk about that also, but this is where a candle opens. This is where it closes. This is the high of that candle. And this is the low. So you have open, close, high, and low. When the market, let's say a new candle is formed on a new time frame, right? When you have your time frames, you have 1 minute candles, you have 5 minute candles, you have 15 minute candles, you have 30 minute candles, you have 4 hour candles. Well, you have 1 hour candles, you have 4 hour candles. Then you have your daily candles, your weekly candles, and your monthly candles. Now, typically when we're trading, we're looking at the 4 hour and below for our actual trading time frames, even though we do an overall top down analysis where you're getting a gauge of what's happening on the daily, weekly, and the monthly, but particularly for our actual structure of our actual trading time frames. When you have a 4 hour candle, that 4 hour candle is made up of 4 1 hour candles, okay? It's made up of 8 30 minute candles and it's made up of literally 16 15 minute candles. So I'm kind of trying to give you guys a gauge, but again, let's say this is a 15 minute candle, right? So let's say the market is going up, it's going up. So we have a whole series of candles making an uptrend right here. And let's say the market opens. So when the market opens, right? Let's say the market opens right here on this uptrend. This is where that candle opens. And then all throughout that 15 minutes, the market goes up, it comes back down, it comes back up, and is literally making up this entire candle. And then when the market makes the next candle, let's say once this 15 minute candle is up, let's say it closes right here, right? I'm trying to give you guys a gauge, but I'm showing you how high and how low it went. Now remember, it opened right here. it closed right here. So that means the wicks that would be involved in that candle before the next candle opens will go up this high, because that's how high it went up during that time frame, and then it went this low. Okay, now in this, you're actually ignoring this candle, because I just drew this as the shadow to show you guys kind of what I meant in regards to what I'm talking about in terms of the high and the low. But this will be that candle formation if, okay, the market, even though during that 15-minute time frame it pushed down this low, it didn't actually close here. So the body of the candle would be here. Now, the reason that this is so important is because you have something called buyer's exhaustion and seller's exhaustion, right? So what this is let's say during a certain time frame of an actual candle closing, the market pushes all the way down. But when it closes all the way up here, and this is how that candle closes. That means that there is a lot of buying pressure in this candle because all of the seller's momentum wore out. So when this happens, price is pushed all the way up, and now we are now about to enter into an uptrend because, again, a lot of our sellers have now run out of the market. And again, it's the same thing for a buyer's exhaustion, where you have literally a candle that opens, and let's say during that time frame, the candle could have gone up this high, but it didn't actually close until right here, right? That means that there would have been a lot of buyer's exhaustion in that candle. So that means that price is literally pushed down in that structure. So I kind of hope this guys made sense to you all. And again, I'm going to explain it a little bit more once we actually get to our charts. But make sure you guys really take heed and took notes of this, because when you're actually looking at the charts, it's good to really gauge a lot of this information like first before you're looking at the actual candles on the chart while price is moving, because it can kind of get kind of chaotic. And that's pretty much it. Okay, so we went over support and resistance. We went over our trends. Remember, we have consolidation as well. Consolidation is the middle, right? But you have your uptrends, you have your downtrends, and then you have your trends that are made up of multiple trends. I'm going to go over that in the actual charts as well. But we went over trend lines, which is basically connecting the lows on the uptrend, connecting the highs on the downtrend. Price action, which is basically, again, the overall flow of the market, dealing with candlesticks. So what is price doing? Do we have a lot of buyers exhaustion? Do we have a lot of sellers exhaustion? Something else we have is momentum. So after that buyer's exhaustion occurs, or after, let's say, that seller's exhaustion occurs and price is literally pushing up, if we have a lot of buying pressure, and I don't want to mess up my little work right here, but if we have big bullish candles, and bullish means going up, bearish means going down, but if we have a lot of bullish momentum, again, that's price action. That's letting you know the market is literally on a bull run, and there is a lot of volume that's occurring right now in the market. We went over pullbacks, which is literally, again, if you're a runner and then you go full speed in a certain direction, you literally have to pull back and slow down before you can finish the continuation of your run. In the market, you have to pull back before you can finish the continuation of your trend. Candlesticks, again, we've already talked about. And again, when it comes to candlesticks, you really want to understand what means buyers in the market and what means sellers in the market. So there's something in candlestick patterns, like people study candlestick patterns, they'll study like dojis, they'll study hammers, they'll study morning stars. These are all technical terms for different like candlestick patterns that are in the market. You don't really have to know them all. You just need to really understand what means buyers in the market and what means sellers in the market. And a good way to understand this is like by bullish and bearish engulfing candles. So let's say you have a bullish candle here, right? I'm going to use bullish without being shaded, and then I'm going to use bearish being shaded. A bearish engulfing candle means that this candle literally engulfed the previous candle. So it literally took up that whole candle. Now, what I mean by understand candlestick variations and what means buyers and what means seller is that you won't always have a picture perfect, pretty bearish engulfing candle. Sometimes you can have something like this, where you just have, let's say, your bullish candle, and then you have two bearish following, where if you add up these two candles together, this will engulf this previous candle. Then you have areas or certain instances where you might have a doji in between. So let's say this is your bullish candle again, and then you have your little doji, and then you have a bearish candle. All of these are like bearish variations, okay? And then we went over our supply and demand, which is again equivalent, somewhat equivalent to our support and resistance, but it's actual our zones. And then we have our market structure, which is literally all of this stuff combined. And the market structure of the market is really understanding your different time frame correlations, which again, I'm going to go over when we get on the charts, and understanding the price action and movement of the market. So I hope you guys were able to learn a lot from this intro to the technical analysis, and I will see you on the charts in a few. Hi, you guys, it's Jessica Laine, and welcome to the chart portion of the technical analysis portion of this course. And I'm super excited because, as you guys know, technical analysis is literally my baby, okay? The charts are my baby. I love them so much. And it's literally how I make the majority of my money. However, I do want to say in the next module of this course, I'm going to be going over fundamental analysis. So you have two types of analysis. Well, actually three. You have technical, fundamental, and sentimental analysis. In this course, I talk more so about just the technical analysis and fundamental analysis part, because sentimental analysis isn't necessarily profitable. I will say that because sentimental analysis is based off of how people feel, whereas technical analysis is based off of price point and data, and fundamental analysis is based off of news. You can literally be a fundamental analyst only and make an immensible amount of money. Okay. You can also be a technical analyst only and make a lot of money, right? I have some friends that are fundamental analysts only. I have some friends that are technical analysts only, but your ability to combine both will just really set you above the bar. Okay. Now, when I break down technicals, as I'm going to show you guys today, we kind of talked a little bit about it on the whiteboard, where we broke down everything and the meanings of what, trend lines are, or support and resistance, why it's used. But I think it's going to really help you guys put a lot of this stuff in perspective as you guys see it on the chart and me actually put it into application. So I'm going to share my screen. And here we are. So I'm on the 4-hour time frame right now, and something that I told you guys at the whiteboard is that you can have something called time frame correlation, and we're gonna go over that also. But first, I'm going to really write down what we talked about at the whiteboard so that you guys can refresh your memories. Hopefully you all took notes about what everything is. So we have our trend lines. Actually, before that, we have support and resistance. So let me put that there. Support and resistance. Resistance. We have trends. Then we have our trend lines. Then we have literally price action. We also have candlesticks. Then I'm going to put supply and demand zones. Now, I'm going to be integrating all of these terms at once. I will go over everything individually, but it's very important that you guys are able to see how everything kind of combines and works together as a whole when you're analyzing. So first and foremost, let's go over our actual support and resistance, okay? So when we talked about this, we talked about how when you have support, is literally a floor in which price cannot go under. So if you guys see this right here, now I hate using thick lines, okay, when I'm marking up. However, I really, really, really want you guys to see what I'm doing. So I'm going to use these thicker lines just so you guys can kind of identify and follow me. But typically when I mark up, my charts look like this. I use very thin lines. And of course, I'm on pretty much a smaller time frame. But you guys don't have to really know this for now. But let's go back to that actual GU chart. Oh, where is it? Hold on. USD. I think I used this broker for it. Okay, perfect. Oops. Stay on page. Here we are. Sorry, guys. Okay, so we talked about support being the floor. Okay. Now, if we look at resistance, remember resistance is the ceiling. And if you draw these, typically I use support and resistance lines on my higher time frames like the daily, the weekly, and the monthly. And I typically use zones on my smaller time frame. Actually, I'm supposed to be on the 4-hour right now, but I use zones on my smaller time frame. And I'll show you guys what I mean in a second. But here, this will literally be my support and resistance, okay? The only reason I put resistance right here is because this is where the majority of price is. Even though we had one breakthrough up here and we had a wick touch up here, and we've already talked about wicks. I'm going to go over it again when we go to candlesticks, but this is an example of that. Now, in understanding trends, so we talked about our support and resistance. This is literally how you would draw it on your chart. Support and resistance is following this trend that you have right here. So you guys see this right here. This is literally an uptrend. So we have a low, we have a higher high, we have a higher low, and then we have this last part here, okay? This is literally identified as an uptrend. So let's just put a text box right here. So we have a low, and it's actually a higher low, so let's go ahead and put that H up in there. Oops, did not mean to do that. I'm trying to delete this one. Oh, that's why the lock is on. Okay, so let's put higher low here. And then we're going to paste this because this is also a higher low. Okay, I don't know. There we go. Delete that. Then here we have a higher high. And then right here we have a higher high. So we have a higher low, a higher high, price pulls back. We have another higher low. Then we have a higher high, okay, because the market is in an uptrend. Now, remember, we're on the 4-hour time frame right now, and there's something called time frame correlation, again, that we're going to go over in a few, but let's first identify these lower points. So over here, based off of 4-hour structure, and it's very important that you guys are able to identify what your different time frames are so you guys understand your structure, because even though this is a low right here, and this is a lower low, okay, I'm not going to mark this up like this because of the time frame I'm on. This is a more of a minor structure move. When you're looking at the 4-hour, you want to get the entire pullback, and technically this entire structure here is what's pulling back. Let me actually adjust this. So we have this would technically be our overall 4-hour structure. Price pulls back over here, and then that's that low for that 4-hour time frame. So now what I'm going to do is come over to the side, and then so we have our lower high. We have our lower low area right here. Then we have the lower low here. Okay. Now I hope everybody's with me. Again, The reason that I counted this low instead of this one is because this is a smaller time frame if we only count this move. This is a structure that is inside of the overall structure. And because we're on the 4-hour time frame right now, we're looking at things from a macro perspective, which is major structure. Okay. Now, there's a couple things that I want to go over. Now, talking about this time frame correlation, I'm going to actually drop down to the smaller time frame so you guys can see this. So we've already talked about support and resistance. We've already talked about trends. So let's go into our more immediate structure so we can kind of see how, you know, this stuff plays out. So in regards first to what I mean by how you can have trends inside of trends, okay? Do you guys see how overall this is an entire uptrend, right? However, inside of this uptrend, we literally have an entire downtrend right here, right? And when it comes to day trading, please understand that you want to be able to capitalize off of all of your moves. So when you understand your structure that is forming, you understand that this is a move that you can take advantage of so that you can make the most amount of money out of the market, okay? And this move, this entire sale was literally 188 pips. We've already talked about pips. We've already talked about lot sizes. So basically, let's say you put $10 per pip on that 188 pips. You now have $1,880 off of this move, okay? Hopefully that makes sense. If not, make sure you guys visit the other modules to make sure you get more in-depth understanding of that. But let's talk about our actual trend lines while we're on this actual minor structure right here. So let's say that we're looking at this structure, okay? A trend line is used, even though first off, let me just clarify something. When I was on the 4-hour time frame, I actually used trend lines to draw my structure, but I want to clarify that I just drew structure on the chart and did not draw trend lines. To get your trend line drawing tool on TradingView, you're actually going to click the same line, okay, that I drew to draw the structure points. But when using your trend lines, you are identifying 2 points and you're literally drawing it into the future, okay? So if I literally connect all of these points right here, I just connected all of this to go into the future. So here, and I'm going to change the color so we don't get it confused from the structure points. Let's make it black. We have a test, we have a test, we have a test, we have a test. Here we have a break that retested to go into this minor structure buy, okay? Now, the reason that trend lines are really used in trading is because it's a level of resistance that you know price is going to go to. But the thing is as we see right here, a level can always be broken. So let's delete these off so you can kind of see what I'm talking about. So again, just like we talked about a few seconds ago, you can have trends within trends. So if I just identify this minor structure trend here, okay, I'm coming this low because, again, based off of this structure, this will be that low point here. All right, so the reason that it's this low is because this entire thing right here is that actual pullback. So again, you guys already know at this point, this is my high. Let's put lower high for right now. Even though off of this trend, this is that highest point, but okay. So we have our lower low right here. All right, so inside of that overall trend, we have a minor structure trend that's here. Inside of this minor structure trend, we have our lower high, lower low, lower high, lower low, lower high, lower low, okay? But remember, that is a small trend that's inside the major trend. Then that trend lines are used again to gauge the resistance of a trend that is trending. So on this trend, this was literally a sell opportunity every time price came to the top of this trend line. Price came here, touched, dropped. Price came here, touched, dropped. And remember, every time price touches, that is our pullback, okay? I didn't write it in here, but let me put a note of it. Pullback. Every time price touches, it drops. Every time price touches, it drops. Now, the thing about trend lines is that, especially with minor structure, trend lines minor structure can always easily be broken, but trend lines, anytime you have a trend line break in a retest, and we'll go over this for anybody that is looking to use the indicator, okay? Anytime you have a trend line break and retest, that is an option, or that is an opportunity for you to make money. Anytime you have a break and a retest is retesting an area so that you can make profit from it, okay? So, just like we just talked about a couple of seconds ago, literally our structure that is broken is here, here, here. Now, let's talk about this for a second, okay? Because now we went into a higher trend. So we just broke down that structure. And again, what I'm doing right now is called time frame correlation. So you guys understand how you can have different correlating time frames, but be able to make money off of all of them. It's very important that you understand minor structure as well as your major structure. So this will be a higher low point based off of this actual structure. Now, even though this high is pretty much the same level of this high, it's a little bit higher. That's the only reason I labeled it as a higher high. But this is the thing that I want you guys to see by the different time frame correlations. If I drop down, and I'm going to use bar replays so we don't have to get lost in regards to finding our price point. If I literally put price here and just drop down into my minor structure, this right here is a whole separate trend. And again, I'm going to use a different color so you guys can see what I'm talking about. So we have this impulse here, we have this correction, we have this continuation here. This is a trend, a minor structure trend inside of that major structure. The reason you want to be able to see these and capitalize off of them is because when you're able to capitalize off of these trends, you're able to really understand. So when this first broke this trend line, we had a minor structure break and retest for that minor structure move. When you understand the minor structure, you can make the money before the major structure opportunity presents itself. So that minor structure is right here. The major structure is everything that you see in black. And then the overall major structure, let's go back to that 4 hour. Remember, we had, I forgot, we deleted the line off. We had this entire impulse down here. And let's make this back that purple color. We had that entire impulse down there. This was the entire flag, okay? And then, of course, we're looking for price to go lower. Or actually, no, price did go lower. We just had on replay. Okay, there we are. So I hope all of you guys were able to see this. I don't want to confuse anybody, so please stop the video and take it back if you need to. But I'm showing you guys 4 hour structure right now, okay? And then if let's hide these texts off. So where's the rest of it? So we have here, here, and here. Okay. So if you guys see right here, we have the overall trend, which is our 4 hour. The overall trend, which is this purple, that's our 4 hour. Okay, so we have an uptrend that consolidates, then turns into a downtrend. Then we have our 1 hour structure inside of that, which is a series of lower lows and lower highs based off of minor structure. We also have this trend line drawn in here, so don't let that confuse you guys. Then we have our overall minor structure, which is this right here. Okay, so this is what I mean by time frame correlation and trends within trends. Now, speaking of trends within trends, something that I want you guys to see is zones, okay? Because when you have support and resistance can really be an area and a region that you're looking like, that you are looking at more so than, let me just use this. I don't even know why I'm doing this individually. So let's exit. Okay, great. So it's a particular region that you're looking at opposed to just one particular area, okay? So if I zoom in, let's say here, right? I can literally put this zone right here because this is an area in which price came and tested as support. This is called a demand zone. Demand zones will always be at the bottom. Supply zones will always be at the top, okay? And it's very important that you see them. So this will be a supply and demand zone. Now, again, the reason I prefer zones over our support and resistance lines is because when you have a line and you just say, oh, it's gonna be that exact price point, it's actually a range in which price can come to, not just that one line be the end all be all of your actual structure, okay? Now, the last part that I wanna go over is, well, two more things. The last part that I wanna go over is our candlestick structure, because it's very important to understand what means buyers in the market and what means sellers in the market. Now, a lot of people subscribe to candlestick patterns where they talk about like 3 white soldiers or morning stars or doji candles and all of those things, particularly me. And this is just all honesty because I believe in being very transparent with my students, particularly me. I do not subscribe to candlestick structure in regards to, okay, a doji means a reversal. Technically in the books, a doji means a reversal, but you can literally have a doji in the middle of an uptrend and price still go up. And you can have a doji in the middle of a downtrend and price still go down. So I kind of like to really have a broader perspective and understand what means buyers in the market and what means sellers in the market, because you don't have to be caught up in all of the technicalities of, oh, a 3 white soldier means that this is going to do this, or an evening star or a morning star. Okay, so a couple of things I want you guys to learn. First off, candlestick exhaustion. Candlestick exhaustion means that price or buyers or sellers, depending on if it's at the top or the bottom, is running out. So let's say here, right? At this point in which this was created, of course, we know that this is a resistance line, which means that price cannot go above this point, but you see it did, right? So let's just put the replay on here so you can kind of see how this was formed. So we have bullish momentum. Bullish momentum means a lot of buyers in the market, but also it means that you have heavy candles pushing up. So it's a lot of volume in this candle. We talked already about candlesticks when we were at the whiteboard, when we talked about the open, the close, the low, the high. So right here, we have a lot of volume in this candle, meaning that it's a big bullish candle, right? Then price plays out. Do you see how right here, there were a lot of buyers that helped form this candle, okay? Price literally pushed up to this highest point, but then the buyers ran out and literally pushed price all the way back down here. This is called candlestick exhaustion. The candles are exhausted from pushing up high, that they push back down because now the sellers are overtaking the market. And of course, if we play this out, this is seller's momentum, because as you see, these are big bearish candles, okay? Which means sellers are in the market. The sellers are now in control. And ultimately, you guys have already learned that inside of consolidation, it is literally a battle between the sellers and the buyers. So let's have another candlestick exhaustion lesson, okay? You guys just saw right here, if you guys just want to put the video back a little bit, you saw how price had literally pushed down this far, stopped, and then buyers started to push price up right here. Buyers started to take over, okay? So now we have the market where buyers are now in control. Does that make sense? And then from this point, we start to make higher highs and higher lows, forming the market, okay? Now, we all know, or we've already talked about how this entire area is consolidation. So after we have these buyers that are forming the market right here, now remember we had this, well, really, I'm gonna just draw a zone back in this area. So we reached that level of resistance, and then again, you see this exhaustion. Sellers began to take over the market again, which now formed all of this bearish momentum. This right here is a doji, okay? So this is what I mean by when people say, okay, when you have a doji, you have a reversal, but you see this candle was already formed before that doji formation was formed, okay? And then sometimes, just like here, the market didn't reverse and go down. The market continued going higher. So I don't really subscribe to the names of actual candlestick patterns. I subscribe to what means buyers in the market, what means sellers in the market. So anytime you have big bearish or big bullish candles with a lot of volume in them, that means that there is a lot of buyers or a lot of sellers in that candle, okay? And a lot of people also call them engulfing candles. So anytime you have a candle that engulfs the previous candle, right? So let's say, for instance, here, this big bearish candle, this entire blue candle can fit inside of it. That is a bearish engulfing candle. Same thing right here. If you put this little blue candle inside of this big white candle right here, this is an engulfing candle. If you look at this blue candle, this little candle right here, this blue candle is engulfing this candle. Now, there are certain times in which you have a large engulfing candles. However, anytime the entire body of a candle can fit another body or the previous body inside of it, I look at those as engulfing, because you're not going to always have a picture perfect, pretty, super, let me just try to find one for a second. You're not going to always have a picture perfect, super engulfing candle like this. Okay. Understand that the market is its own entity, and it's not going to be picture perfect, pretty every single time. All right. So I hope you guys were able to put together a lot of the stuff that you guys learned on the whiteboard, actually seeing it in application with real life data and real life charts. I'm going to put this back on here so you guys can see this. I am going to be going over some other stuff in depth as in regards to entries when I go over you guys indicator portion of this course, okay? But for now, the best thing, or the main thing that you need to understand is what the trends are, support and resistance, literally understanding how to draw your trend lines. Remember, you're connecting each point at its highest point, okay, or each low at its lowest point. So when you are drawing a trend line on an uptrend, you want to literally connect the lows. So if I draw a trend line right here, I will literally be connecting these lows, and then this breaks right here, it retests right here. And remember, your retest is always your entry for a buy. Okay, I mean, your retest is always an entry. For this case, it will be a sell, but you saw over here when we drew that trend line, I think it was over here. Right here, somewhere in there. Yeah, it was right here. This was your entry for this buy. Okay, so when you draw it on when you draw a trend line on a downtrend, okay, you're connecting all of the highs. when you draw it on an uptrend, you're connecting all of the lows. Every time price retest, that is your entry. All right. So I hope you guys learned a lot in this technical chart portion of the course, and I will see you guys on the next module. Hi, you guys. Welcome, welcome, welcome. I want to do this quick video for you guys so I can show you guys how I integrate fundamental and technical analysis together. I know that I presented a lot of information for you guys, but I want to show you how this works in like real life examples so you guys can really understand and take advantage. Now, please, please, please remember that fundamentals does take some time to grasp. However, you have to keep reading up on news because ultimately, again, it's macroeconomics. Okay, so you're dealing with different countries, you're dealing with different economies. However, still remember that you can be a technical trader only and still make a lot of money. But in this course, I wanted to offer you both. Okay, so I'm going to take a step back before I go to Forex Factory and show you guys actual news events and go over this technical analysis that I had done a while back. And I am also going to kind of explain how I integrated fundamental analysis with this, okay? Now, you guys have not learned Fibonacci strictly because Fibonacci is extremely hard to learn because it's dealing with structure. Anybody can draw fibs, but if you do not draw them correctly, you can lose a lot of money. So I really wanted this to be a very, very, very in-depth course where you guys can make money, okay, efficiently and effectively without having to really complicate things, okay? So previously I had a trend line break and retest that gave me this overall sell. Now, when I analyzed this, it was right here at this yellow, right? Let me actually draw it so you guys can see. Price was here when I analyzed this. And if you guys see the blue ghost pattern that is behind it, okay, this blue ghost pattern was drawn on here before price actually played out, right? But that was strictly from my technical analysis. So I had an overall buy on here and there was a level of resistance back here. I'm so sorry that this is a screenshot, so I can't actually show you guys back in price. However, it was a level of resistance that was here, which is why ultimately I had price literally stopping right there. But let's actually look at what happened fundamentally. So right here, the market pushed up because the Federal Reserve started talking about stimulating the economy and talked to the Trump administration about the $2 trillion stimulus package. Now, of course, that made investors extremely excited. Then the market literally shifted up. So okay. Then where you see where it says B, basically the stimulus deal was not signed yet. And there was fear of unemployment numbers. So then the market literally pulled back. Okay. That leads us to see where even though unemployment news came out, the stimulus package deal passed through the Senate. So investors became excited. That shifted the market back up. And then here at that level of resistance, the US now leads the world in confirmed coronavirus cases. And when this news came out, of course, that's bad news. So the market pushed back down. I wanted to show you guys this, one, because it was literally a real life example that actually happened, but also because sometimes you will have news events where if a president is talking or it's like literally news that just happens, it's not going to be on the economic calendar, okay? So you really have to pay attention to like CNN, Bloomberg, if you really want to get good at fundamental analysis. However, let's actually go into the charts and break this down. So this is a technical perspective that I did on gold. We already talked about consolidation. This was literally in a range. So we had this level of resistance here, this level of support here, okay? Now, we don't know exactly when something is going to break out, right? But that's the beautiful thing about understanding everything in its totality, because right here, all throughout here, you can take literally minor trades, because this is literally about 100 pips each way. So 189 pips. If you use a standard, that's literally $1,890 on that trade. But right here, we had a trend line break and retest. So you guys have learned trend line breaks and retest. This was the break here. This was the retest here. This was your entry. Literally, the market shot up. Now let's look at the dates, okay? So we have the 28th, okay, and we have the 29th. So I'm gonna go over what happened both of these days and why gold was so bullish. But first, just remember that when you are looking at currency and also when you're looking at anything dealing with Forex, you have the base and then you have the quote. So if you see right here in the background, gold is the base, US dollar is the quote. So if US dollar is going down, that means that gold will be shooting up, okay? If US dollar is going up, that means that gold will be shooting down, okay? So let's just make sure we remember that from the very beginning of this course. Now, if we go into Forex Factory and we really look and see, okay, remember we said the 28th and the 29th. So right here, and remember, some news will be literally, I would say, sporadic right here. So even though this is on FOMC, it was an actual press event that happened, okay? So if we click FOMC statement, right? So more hawkish than expected is good for currency. Okay, now what is FOMC? It's the primary tool, okay? This is the primary tool the FOMC uses to communicate with investors about monetary policy. It contains the outcome of their vote on interest rate and other policy measures, along with commentary about the economic conditions that influence their votes. Most importantly, it discusses the economic outlook and offers clues on outcome of future votes. So, of course, we know hawkish means that literally price is going up. Dovish means price is going down. Now, if we look at what actually happened over here to the right-hand side, we see where it says Powell's dovish hold sparks positive risk sentiment. Okay, so what does that mean? Right? Let's actually click the article. Now, right here, this was the start of the week. We don't, well, not to say we don't care about that, but we actually want to know what happened at that particular moment. So during FOMC, that's when Jerome Powell spoke, and it says stocks were supported as Jerome Powell kept a dovish stance, bearish, okay? And this lifted risk sentiment. Okay, so actually, let me take a step back. The expectations of a deeper correction in stocks are still hanging heavy over the market participants, and the Fed's meeting midweek was always likely to be a crossroad decision for the week. In the end, stocks were supported as Jerome Powell kept a dovish stance, and this lifted risk sentiment. This also allowed gold to break higher than expected, okay? So remember, interest rate decisions, Powell was sufficiently dovish, okay, which means, again, the US dollar is literally going down. Now, when we look at this, you remember the US dollar is going down. This was the 28th, literally price broke, retested. Our fundamentals line up perfectly with our technicals. Now let's go, we're going into the 29th. If you see the date down there at the bottom. So let's look and see what happened on the 29th. So on the 29th, let me go forward. Let's look on the 29th. So USD, okay? Now, if we click this, the actual is a negative number. They were looking for it to be 8.5% in regards to GDP. We already talked about GDP. So the actual was not as good as expected, which means that the US dollar, of course, again, is going to drop. So when we are looking at the market and the market kept going up, that was literally because right here, actual being greater than the forecast is good for currency, but that's not what happened here. The actual, which was 6.5%, was less than the forecast, okay? Which was why the US dollar literally went down and then gold shot up. So again, it just helps you have more confidence to stay in your trades when you are aware of everything. But please, please, please just remember, I don't want anybody to get frantic trying to keep up with the news. This has to be something that you really love and enjoy doing to really, really grasp it. But I hope you guys were able to really understand that perspective and apply it to your trading. I'll see you guys on the next lesson.